off the exchange, and here is a quick breakdown of how I made my $130 profit today on sell with GBPUSD and buys with USDCAD. Right, let's just jump straight into it. Straight, raw, uncut, authentic trading right here. Right, so let's just go to the nitty gritty today. Obviously, I had a bias for a buy on USDCAD, bullishness with USDCAD, bearishness with GBPUSD. Was a little too eager early. Positioning was a little too early, and I was stopped out early. As you can see, took a lot of losses. Well, took losses after losses, little small losses, big losses. Just was kind of like over trading earlier, and as you can see, it totaled up to about a $90 loss, and initially at the end of the day, and then bringing it back. As you can see, we had a total profit of $130. So that means I actually cleared my $90 deficit, and then also made $130 on top of it. So you do the math as far as how much profit was made today and the opportunity that could have been, So jumping right into it, we're going to jump right into GBPUSD and why I saw the bearishness in GBPUSD today. Okay, so first starting off, just starting off and taking notes of how the week started. All right, Sunday opening, we had a complete overbuy into the excuse these notes for the previous week. Let's get up to date. All right, so Sunday, coming into Sunday, we had an automatic buy where it just bought up. Oh, I'm so sorry. See, gotta zoom in, gotta be organized. That's one thing you gotta do. You gotta be organized. All right. So now I'm actually on point. As you can see, Sunday opening price, we had an immediate shoot. Right, price opened up at 132.80. Let's just say 132.80 to be fair, and had rise all the way to 134.14. So that's over 100 pip bullish, just straight push up starting out the week, right? So seeing that happened, understanding that okay, there's definitely some inefficiency in the market. We may look for some balancing because it's been on the tear bullish wise for the last couple of weeks. Okay, so that was one thing that took effect and took account into going into my trading day. Two, I looked at what my scenario was coming out of my London session and to begin the first trading day of the week, right? So what I did was I went to the 15-minute time frame, and if you trade with Rich Off the Exchange, you know our motto and our setup of what we and how we look for. So hey, just follow along, and if you don't, this is your opportunity to jump in and tap in because we working over here, yo. We working, right? So continuing to going, I jumped in, saw that okay, at the beginning of my London session, beginning of my trading day, my Asia range high was broken prior to London session, and with London session, bullishness continued to make the high of the day and current week. So I'm already now anticipating my Asia range low scenario to now play into effect. Okay, I'm now expecting that to play into effect. So that will be price action, buying up, and now creating a bearish scenario to now return to this level here, right? As you can see, it didn't. But in between it staggering and not, making it all the way down here, as I would have hoped, I was still able to play and make opportunity in here, right? So what I saw was simply that price was making new highs and going to be breaking lower, right? Because of the imbalance of the market just shooting up 100 plus pips over since Sunday, right? So here, as you can see, in London session, the conclusion of our 3:30 window, another trading with Rich Off the Exchange, Jim, 3:30 window. Okay, after our 3:30 window, we see that a high was created. That high was now broken here, and now a lower high was created here. That is key scenario for us to now look for bearishness. As we can see afterwards, we had a bearish impulse push down that now broke low and show us that it was now a change in direction. Okay, change in market price delivery. So with that, we let price ride out, and create a definite low to where now price has another change in state of delivery and starts to push up to now we have a low. Okay, so as you guys seen earlier, if you was following me on Instagram and my story earlier, I had my Fibonacci retracement, which is a tool used to project and predict how far a retracement may be and what level that it may expand to. So with that tool, I use that tool and I marked my high that was created after this high was broken from London session. I drug my levels to where they were supposed to be, and I seen that my interest in golden levels, as you can see, the yellow lines at levels that I'm looking for and what want price to retrace to and continue to go lower and target lower levels and lower objectives. Price pulled back and was respecting this area. It was not showing any type of hardcore intent of, you know, breaking these highs or going in any higher than this actual area, referencing this area here, this break-in change of state of delivery here. So with that being said, I played the smart, obviously reflecting on the mistakes that I actually had made a couple hours earlier, and I'm actually on the clock, so I was forced to be patient and, you know, forced to have to interact at certain times, which sometimes is a benefit. Okay, but as you can see, we jumped in, and the opportunity I got in, and my entry was at 133.99. I took it all the way down to 133.73 as shown on the terminal. Let's just refer to that right now. Entry price 133.98. SL price 133.76. TP price 133.05. So SL was in profit, right? 76 will be down here. SL will be profit. Currently, where price is live right now as I'm making this video, and I exited the market here, right? That's my overall basis and bias of how I actually got into this market. Just being patient, using the tools that, you know, grant confluence and confirmation with my outlook, and just being patient and not repeating the same errors that, you know, that I did earlier. Okay, so with the Fibonacci retracement, I use that to, you know, project and predict the levels of retracement. And as you can see, when price started to show some type of confluence, the target was to get to my ultimate -1 level of 1.3343, which is right in the area of a big institutional level of 133.50. Big rich on the exchange, Jim. And as you can see in the video, I was targeting, I think, 133.59, and as you can see, it's right in the same area as this level here of the 133.57. So we got it very, very close, but we didn't quite pan out the entire extension of the concept, but was able to still make good profit and, you know, have that profit and win on the day. Okay, so now that was my bias and my outlook for GU sell today. Going into USDCAD. Going into USDCAD, I was wicked out early. As you can see, I was wicked out early going into New York session because price was kind of, you know, back and forth, making up his mind. We had a long wick here, referencing the fair value gap that was created on the smaller time frame, right? So initially, going into this session as well, it's the same thing that happens with GBPUSD, but just inverse. My Asia range low was broken. Let me just line this up. My Asia range low was broken, right? So now that I know my Asia range low was broken after having such a bearish decline from Sunday's opening, I'm now looking for the market to kind of balance itself. So that theory now rolls over to USDCAD, right? So we identify what's going on and where do we have a change of delivery. We have a change of delivery right here at this candle, that if we go on a 3-minute time frame, you scroll over, 3-minute time frame, we have a fair value gap that was created at 5:30 a.m. reference right afterwards, and we had an initial push up which stalled out and now fell down, you know, retraced back and referenced the fair value gap again, right? So again, I mentioned this is where I was stopped out and I lost my initial trades for the day. But after jumping in and seeing that, okay, at a key time of 10 a.m., well, not even 10 a.m., at 9 a.m., price was reluctant to go lower and, you know, devalue this fair value gap. And then again at 10 a.m., price just wicked it, referenced it, and kept the bullish bullishness, right? Understanding and taking into account the anatomy of the candlestick, seeing that they're nice, big, and strong, bullish candles pushing up, right? And now we have price making higher high. I was able to now, once we had another price push up, I was able to jump in where I initially took entry in originally in the day at 37.99. I doubled my entry on the way up. I think at a high, I took some slack when it retraced again, but then as you can see, it pushed up again, so I was able to get out of that, and that's where I was granted my profit for the day. Okay, so again, that was because of a fair value gap and the change of state of delivery on a 3-minute time frame going into London session. I mean, going into New York session, right? As you can see, this was 6 a.m., right? Being patient, watching what price does at 8:30, 9 o'clock, and 10 a.m. Price referenced the fair value gap, was able to push up, right? And after giving confidence after this push up, price created another small fair value gap that I took confidence in and was able to then take my entry after coming out of it, and showing that it was valid and concrete to hold. As you can see, price referenced it, didn't even break it, got right low, right towards the low, and then we started to push up, right? And I took my entry here, and we pushed all the way up. Okay, and as you can see, the overall goal was to get. Wait 1 second. The overall goal was be able to get to our Asia range high, and as you can see, that's what we was able to do. Okay, we was able to get to our Asia range high, and after getting to our Asia range high, the daily target and push was accomplished, and we seen the market kind of fall off and be stagnant to where as though now we're in the next day preparing. Okay, so Asia range high, Asia range low to your Asia range high. You have a fair value gap that was created on a 3-minute time frame that was happened right at the London session. So if you weren't able to catch the London session move, you will be patient into New York session. Wait for New York session to form, and after your key times, and see, hey, if it's breaking down and it goes, it shows you that that bullish scenario is invalid, and you have to sit on your hands and wait, or be able to adapt to the market and switch your bias. But if not, you show your patience, and then you get lucky to show, okay, price doesn't want to go any lower, and that is references the point. Then now after referencing the point, it creates another concrete stepping stool, and you're now able to ride that up, which is a fair value gap coming off of the 9:45 candle, going into the 10 o'clock hour. Okay, and price references it throughout the PM session, and it continues to go up. Now this granted me, let's see, this granted me about a potential for 60 pips, but I didn't get the full 60. So let's see, what did I get out? Another honest answer right here. The exit price 38.44 after getting in at 38.13 and 33.19. 33.98. I'm sorry. 33.98 and wait. I'm reading this wrong. 37.99. I'm sorry. 37.99 and 38.13. So 37.99, right, already on there, and then 38.13 is where I got into it. Right after I saw that, okay, we were coming out of this fair value gap and price was, confidently moving up. I was able to get that, and I got out at exit price 38.44. Okay, 38.44, which was right there. 38.44, which is 45 pips. That's a great day. That's a great day. So simply put, the key to it is being able to understand your key time frames of the day, London session, New York session, and understanding the key times of what price is doing, being patient, and be able to now act upon it once your proper setup is there. If your setup is not there, do not get up on it, because you don't want to be like me and have a drawdown of $90 and then now potentially have to hunt back forward. Okay, that's my what's supposed to be quick synopsis of the trades that I took today. Raw, uncut presentation, and we're gonna get out the trenches with this one, baby.